Yo, what's up, everybody? Welcome back to the Caderna podcast. I am your host, Brian Caderna. In today's episode, I'll be sitting down with Dan Nicholson to talk about everything from Ironmans to accounting, entrepreneurship, life as an author, and much more. It was pretty cool to catch up with someone in a kind of similar mindset as myself with both athletics, family life, and business, and merging it all together. So this was a good one. I think we were able to tease a lot out of each other and have quite a informative conversation. I'm going to give you his background in just a moment if you don't know who Dan Nicholson is. Really cool guy. But first, I just want to remind everybody, wherever you're watching or listening, please be sure to subscribe to our show, leave us a review, tell a friend, and we can keep on growing the audience and help people achieve wealth in its original meaning, a state of well-being. But as for today's episode, who is Dan Nicholson? Dan is a serial entrepreneur, author of a USA Today and Wall Street Journal bestseller titled Rigging the Game: How to Achieve Financial Certainty, Navigate Risk, and Make Money on Your Own Terms. In addition to founding an award-winning accounting and financial consulting firm called Nth Degree CPAs, and being named a top 40 under 40 accountant globally 4 times, Dan has created and run multiple small businesses, including Certainty U and Certainty News, a platform that's syndicated to over 1 billion monthly users. Dan also hosts his own podcast show, which I'll put in the show notes today, and he's a consulting producer for PBS's Opportunity Knocks. Dan lives in Seattle with his wife and 2 children. He's an avid sports fan, and he's completed 3 half Ironman triathlons. Without further ado, here's my guest, Dan Nicholson.
Is going to require work and time and sweat and toil.
If money wasn't an issue, what would I be doing?
Don't worry about it. You'll figure it out.
Change is the only constant.
The Caderna Podcast.
Dan, welcome to the show.
Yeah, thanks for having me on.
Yeah, I'm excited for our conversation. We're both kind of in the financial realm. Before we dive into all that entertaining topics, though, so you've done a few half Ironmans, have you?
I have, yeah.
That's awesome. Where did you do yours? Because I actually did an Ironman up in Quebec in Mont Tremblant.
Gotcha. Okay, so I have never done the full Ironman. So if you've done that, you got me beat for sure. We're both clearly masochists to go through any half or further, or even to some extent the Olympic distance. So the first one I did was in Bend, Oregon. Okay. And then I did a couple in the Washington State area.
Awesome. I've never been out there. I hear it's obviously a beautiful part of the country. So
if you like climbing hills on your bike, come on out. I mean, the first one I did was about the first 30 miles or so. You've got about 3,000 feet of elevation gain, so it's climbing up to the top of a mountain. So if that's your speed, that's how a lot of the half Ironman distance races are out here.
Huh. It's funny you bring that up because like over here on the East Coast, like I was always just riding my bike up and down the shore as flat as could be. And I was like, oh, the bike will be a breeze. And then when I did my Ironman, it was up in Quebec and it was right like in the middle of a mountain range. And that was without question the hardest leg of the triathlon. And it was because those climbs just blew me away. I was not prepared for them. Yep.
Somewhat related to that story, when the first time that I met my wife's dad, we were dating at the time, and we just moved in together. And so he sort of abruptly was like, "Okay, you're living with my daughter. I should probably come out and figure out who you are." And she grew up in the Midwest. He's her parents lived in the Chicagoland area, just flat, right? Flat as can be. Avid cyclist, so he comes out to Seattle and wants to go on a bike ride with myself and my dad. My dad is like an OG cyclist, like riding his bike into work in the 80s and 90s, having people throw cans and bottles at him, like, "What are you doing on the road?" So he's been kind of a savage on the bike for years, and So now father-in-law comes out, and he's a quote unquote long distance cyclist. So he wants to go on one of our training rides, which is like 50-60 mile ride around Lake Washington. So I live in the Seattle area.
Okay.
So we the first part of the ride is pretty flat. I mean, as far as I'm concerned, but not flat compared to
Where
what he's
from.
used to.
Yeah.
So the whole car ride there for the start of the ride and the first 5 or 7 miles that are flat, I'm telling him, like, okay, we're going to come to this really steep hill, like steep drop. You're going to want to follow us, get behind us, because you're going to want to take a really wide turn or pull out really wide so we can make this hard turn. So
Okay.
I'm telling him this 3 or 4 times, like along this. And then we're coming up to it's like, okay, this is the hill. Get behind us, follow us. Again, you want to go swing wide or you're not going to make this turn.
Yeah.
And as foreshadowing, my wife said beforehand, whatever you do on this ride, make sure my dad does not get injured. I'm like, he's not going to get hurt. Like, we'll be nice to him. She
Yeah.
knows how competitive I am and how competitive my dad is. She's like, no, seriously, like, just make sure he doesn't get hurt. Like, yeah, of course. So we get to this hill, and I mean, it is really, really steep and short. So we're swinging wide. All of a sudden, I look to the right. He just goes trucking past us.
Oh boy.
Gets to the turn, tries to make it. There's other people coming out the other side. Rams right into this post. Flies off his bike.
Oh my gosh.
Busts his head open. He's like bleeding from part of his head. Pops the tire on the bike. And of course, you got to play it off because you're like you're the dad of this. Meeting this boyfriend that your daughter lives with. So the last thing you want to do in that moment, I guess, is what just happened. And so he tries to play it off, totally tries to play it off. And for the rest of the ride,
he continued.
He continued, but he was like, you know what? I think we should just let's just make this 20 miles instead of 60 miles. And it was like we crushed his soul in that moment.
Oh my gosh.
So for Midwesterners or people who are not used to the hill climbing, like, it's legit. If you're following someone and they tell you like this hill is going to be really steep in either direction, you probably want to follow their lead. Otherwise, you end up like my father-in-law, just getting totally humiliated by your daughter's boyfriend.
Jeez, how did that conversation go when you got home? Like, honey, I think we killed your dad on this ride here.
She, not great. Yeah, not great. She didn't find it as hilarious as I found it.
Yeah.
And now he has
one
to
of those
live with
things
them.
you can look back on, right?
Right. Yeah. And now he has to kind of live with that for the rest of his life, which is like 15 years, where it's not like if he's giving me a hard time, it's just like I always have that. Like, well, it could be worse. We could be on a bike ride where you're like running into.
I'm sure he loves that. Yeah.
Hates it. Absolutely hates it. But I love it. Anyhow.
Yeah. I bet. Wow, that's crazy. And it's wild because I think a lot of people were like me starting out that, you're riding a bike. You cruise. How hard could it be? Everyone, like new triathletes I meet, they're always intimidated by the swim. And that's how I was. I was like, I'm going to drown out there. The bike will be fine. The swim, I was like, with enough training and getting technique, you can really just kind of start going in kind of cruise control out in the lake or wherever it might be. But yeah, once you throw those steep hills and a 100-mile plus bike ride, like that will test you.
100%
for sure. Yeah.
Admittedly, I still struggle with the swim, but to your point, there's this saying in the triathlon world about how you're not halfway through the race until you're halfway through the run.
Yeah.
I don't know if that's been your experience, but those last 6.5 miles ish on a half Ironman or 13.1 on a full, that you really, if your nutrition was off, if you were outpacing yourself at any point on the race of what you trained to, like that all catches up to you in that last little stretch. And it's kind of reflective of business and life in general. It's like on any project, Yeah, go ahead.
What's kind of interesting, as I think back on it, I did my Ironman in 2015, and I remember the swim vividly. Like, I had a really rough start. I got kicked right between the eyes as soon as we started. I
Yeah.
ended up drifting way off course, and I almost got into like panic mode. Then I kind of recovered, and I had a really good swim. The bike ride blew my mind, and we did I don't remember what it was, like 114 miles, something like that. So it was I think a 57-mile loop that we did twice.
Yeah.
And that I remember vividly, because you do it twice, and the second time through, the points where it's like, oh my gosh, how am I going to do this? What's weird is, like, I honestly don't remember all that much about the run. And I know it was hard as could be, but it's kind of funny. It's like, it feels almost like looking back at it, like a fog between, the start where you were running up this hill for like about a mile, and then the very end where you're just like euphoric, like running through the finish line. That almost like 5 hours in between where I was dying was like just almost erased from my memory.
There's not a whole lot of logic and reason that compels one to do a half Ironman, or it's almost or Ironman. It's almost comparable to like bungee jumping or skydiving, where I don't know if you've done any of that sort of stuff, but you get
I've
done the skydiving once. That was enough for me. And you get up there and you're like, okay, nothing about what I'm about to do is logical. Like, I just have to shut off my brain. Like, grinding through a marathon after you've just rode your bike for 100+ miles and you swam 2.4. It's like, there's no logic and reason is out the door at this point. It's like you're just pushing through, and you're just trying to get that medal at the end, really. Like, I just want to finish.
It's weird. And I guess there are a lot of kind of correlations to business, but I do remember that in the marathon portion is that I broke it down to kind of such small little bites that I could chew, where I was literally looking at the next telephone pole and I was like, just get there. Don't get to that, and just get to that. And I did a really weird thing. I remember where I was like counting, and I was like, all right, I'll hold this pace and let me just like count to 20. And then let me just count backwards from 20. And it was just like really like things that like I tell people, and they're like, that's like the dumbest thing ever. Like, you enjoyed this? And I was like, I didn't really enjoy it, but it was like just doing those little things and adding them up got you 1 mile further and 1 mile closer. I don't know if you ever felt that way, like you had to keep kind of segmenting the whole journey.
I think we're similar in the sense that doing little math games in my head was the only way to get through those races. It's like recomputing. It's like, okay, I'm going this average speed right now, and this is how far I've gone, so this is how much time I have left. And just kind of breaking things up into chunks and trying to distract it's a little bit of a flow state, like distracting your brain to some extent.
Correct.
It all, to me, relates back to business, or there's so much that can be applied to business, because I think business is a sport. There's a scoreboard. It's your profit and loss statement. It's your balance sheet. Like, it's a scoreboard that really is reflective of the decisions that you're making. And the day-to-day consistency. In my world, we say consistency over accuracy. It's not that accuracy isn't important, but the consistency of how you're doing things is key. You could be accurate one day, but if you change your process the next, it's really hard to compare. So those little milestones, it's like, okay, we're trying to get financial success, or what I call financial certainty. Like, how can we break these up into smaller buckets, smaller steps, and be able to measure that and then be consistent with it day after day, and kind of make it as boring as possible to some extent, because oftentimes where we wreck ourselves, is when we try to be too creative in areas that don't need to be creative. You don't need to take a lot of risk to pay a 0% tax rate. There's already a bunch of case law and products and strategies to do that. So we don't need to be overly creative when we can just kind of copy the existing rules that are out there and make it our own.
Sure. Yeah. And that's kind of like something I often tell new advisors that come into our business and do these seminars and stuff, I always remind them it's a marathon. Don't expect to hit the jackpot tomorrow. Like, it takes a really long time, like any entrepreneur will attest to build a business, but it's a marathon in which like you're sprinting every day. And I'm curious to get your take on, like, do you have, because I hear different things from successful people. I hear some that have a routine that they do not deviate from. And then I have others that say, oh, every day is different. I love the spontaneity and I just go full speed. What for you, like, and you run a lot of different pursuits. You got books, podcasts, business, you're doing triathlons. What's your take? Like, what does a day look like for Dan Nicholson?
Yeah. Kind of tangentially related. I recently launched something that I call the 5 wealth types. And there's an assessment. If your listeners want to check it out, just wealthtype.com. You answer a few questions and it tells you, are you a hustler, a gambler, an optimizer, a saver, or a outsourcer? And the reason why I mention that is that the optimizer is going to be the person who's they want the morning formula, and they've kind of gotten things down to a science of what correlates to what activities for them correlate to the highest degree of success.
Okay.
That's very much an optimizer. They have all the spreadsheets, KPIs, they're tracking, but there's no right or wrong wealth type. Mm-hmm. We've just been told oftentimes it's a sort of all or nothing type of thinking where you're a saver or you're a spender. It's sort of like the Dave Ramsey approach, like you either no debt or you got the other side of it. We always have these kind of competing extremes that get taught in finance. But what I find is that, again, there's these five categories, and there's no right or wrong, but you want to lean into those strengths. So if you're a gambler type,
that's the one I wanted to ask about.
Then you need more flexibility in your schedule. You're always going to be chasing upside.
Okay.
Now, when I say gambler, it doesn't mean that they're literally going to the casino. They want to make bets, as many bets as possible, oftentimes. And ideally, they're only making bets where there's significantly more upside than downside.
Yeah.
And so with any wealth type, there's pluses and minuses. And so how do we reduce all the minuses, eliminate all the downside, so we just have the upside? So most people assume because I have a credentials next to my name, CPA, that I must be a saver or optimizer, but I am more of the gambler type.
Really? Do you find that makes you quite an outlier in your profession?
Absolutely. It absolutely does. And that's not, again, it has a pejorative or has a connotation of a gambler. You must be doing a bunch of unhealthy things. But I would say it's more about, in my case, how do I find those situations where there's way more upside? So on the tax side, how do we find ways and strategies that are ethical and legal to reduce your tax liability by 30 to 100%? Mm-hmm. On the writing a book, how do I figure out a system so that I can make it a bestseller? Like, how do I find because if I'm going to make a bet with my resources, I want it to pay off.
Sure. And so I just have a question on that, Dan. Like, when you identify, all right, you're more of a kind of gambler within the accounting realm. When you say something like that, do you impress like that skill set or that nature that you have on your clients to say, this is what we're going to try and do, and we're going to try and save more money, we're going to take these things that do carry some potential risk? Or are you just referring to like, no, you'll go be like an amoeba to whatever those clients want, and then in your own life, with your own business pursuits, that's mentally what you're going to do with your time and your money?
So my approach is to meet people at their individual point of need and to help them do what I call play their game, lean into their strengths. Okay. So part of the reason why I designed this wealth type assessment is so that we could help a client figure out, okay, you're a hustler, you're a gambler. So based off that, here's how we build a plan, a roadmap for you around that wealth type, so that you're going to still continue to feel excited about your business, but we can eliminate all of those cons, those risks where you're going to keep blowing yourself up. So 82% of small business owners go out of business because of cash flow problems. So that's that's across the different wealth types, right?
Yeah.
So a lot of what is happening is they keep hitting the reset button. Back to consistency. So we want consistent execution. Compound, in your world, like compound interest. Every time you take money out of the account because you're trying to time the market, you might be missing out on like the compounding that happens. So business owners, every time you go back to zero, blow yourself up, start over, you've missed out on all this compounding effect. So we're trying to help them assess their type and then implement the strategies that are going to work for them, rather than you have to do it my way.
Gotcha.
Which is how most CPAs are. Most CPAs decide the risk profile for the client. They decide what they're going to implement, how it's going to be implemented. Oh, you know what? The IRS is going to audit you for that. I don't feel comfortable with that. I actually think that's unethical. You couldn't get away with that in your world. You've got to actually assess a client's risk profile and then design a portfolio or recommendations based off their risk tolerance. That's my approach.
So like, and I got to ask kind of a question relevant to that. Do you find that your clients perhaps get audited more than just a client going to another run-of-the-mill CPA?
I can count on one hand how many clients have actually been audited in 15 years that I've been running my firm.
Yeah.
And there's a couple reasons for that. One, audits have been at a kind of historic low. So part of it has just been what's going on with IRS resources. But the other side is that I'm about taking calculated risks. So I'm not going to the casino and just betting my entire paycheck. That's not what I mean by gambling. I'm about rigging the game. How do we find the opportunities where if I bet $1, I have a chance to win $10? So in the case of the tax world, and it surprises me how few CPAs follow this or understand this.
Okay.
So Congress writes the rules. The IRS interprets the rules. They were given authority to do that by the Department of Treasury. But ultimately, a taxpayer can disagree with the IRS, and they take that to court, tax court. We like those people because they're not typically my clients. My clients don't want to go to court. They don't want to be in a battle with the IRS because that's way more downside than upside, just taking up all those resources. But we like people who go to court and challenge something because that becomes public record.
Sure.
So our approach is not to come up necessarily with new strategies that have never been done before or hide money in foreign bank accounts or take a lot of unnecessary risks, because that's not finding a lot of upside. It's let's go out and study the court cases, actually read the tax code. Few CPAs actually read the tax code and regulations. And then look at the IRS audit manuals that are public record. And based off that, when we show somebody these strategies, oftentimes two things are happening. One, we're lowering their tax liability, which of course they love. But two, we're actually lowering their risk profile because now we're actually conforming to what the rules are. We have the actual documentation exactly spelled out the way that the court cases have said they need to be spelled out and the way the IRS would audit them. So it's a little bit counterintuitive, but we are taking less risk while also paying less tax because we are actually following the rules.
And so I guess my question to that is, how do you do all that? How do you keep up with things? Do you because I don't know your business profile all that well, do you have various niches? Do you have one niche? Do you have a team that says, okay, you guys stay up to date on every piece of thing that's impacting, construction. You guys are following the finance. You guys are following medical and healthcare. Like, you find these different types of businesses sometimes have, different pros and cons tax wise. It just seems like while running a business and doing all the things we like to do, wearing different hats, the technical side is a lot to always be keeping up with.
It's a multi-pronged approach. So
Mhm.
kind of go back in my career. So when I graduated college, I did a fellowship at the board that writes all the accounting standards in the U.S. So maybe you've heard of GAAP, Generally Accepted Accounting
Sure.
Principles, or
Yep.
FASB, GASB. These are the two boards that write all these accounting standards. So I worked on a derivatives and hedge accounting standard. That I think
Okay.
is what kind of biased me to be more of a gambler, in
Mhm.
the sense of derivatives hedging is about how do I make bets where there's way more upside than downside. So that was the first sort of quarter of my career was in capital markets, derivatives hedging, which sort of bias how I look at things.
Mhm.
Reason why I mentioned that as sort of a response to your question is that I started my career in research at sort of the top of the food chain, if you will. So in the accounting world, that fellowship would be the equivalent of finishing law school and clerking for the Supreme Court.
Yeah.
And so I have that skill from having done that fellowship. With that comes certain relationships as well.
Mhm.
And so part of the approach is, if you're going to be really strategic on the tax and accounting side, you need as many relationships as possible from people who are in the legislative process or have relationships with people who are in the legislative process. So we have contacts, people, for example, who are former IRS commissioners, and they give us insights about trends, IRS's position on things, bills that are in progress, and are they likely to progress, and what is the real incentive behind it. So part of it
Mhm.
is relationships like that, and relationships with other strategic advisors, and then it's doing the reading, having the conversations, keeping up to date on it, going to continuing education, being subscribed to all the newsletters. And so that is kind of
Sure.
distributed across different members of my team and myself who were kind of keeping up on it. But you have
Mhm.
to love it, or
Yep.
you
Yeah.
have
Definitely.
to be curious about it at least, and um, and just kind of keep a pulse at all times. It's not something you can pick up for a couple of days and then not look at it for a year or two, and then, oh, what's going on in the tax world? Like, it is a kind of everyday thing.
Yeah. Yeah. You definitely have to love it, like you said. And just to give us a little insight to kind of your world. So you were working on this research side, with a lot of the powers that be, and then you decided that you wanted to be an entrepreneur, kind of do your own thing. Can you take us through some of what was going through your head at that time of life? How old you were, maybe what you had going on, and what gave you the confidence to take that leap? Because I can almost guarantee you that right now, as we air this episode, there is at least one accountant listening that's saying, you know what, I know I can do it. I want to do it, but they've been waiting and they
Mhm.
haven't done it. Walk us through what was going through your head when you said, you know what, it's time to be an entrepreneur.
Yeah, so I'm an accidental CPA.
Okay.
I grew up with the entrepreneurial spirit and went to college and got an accounting degree and a information systems degree, just thinking the combination of the two would be the best skill set to be an entrepreneur. And I kind of fell into some uh, favorable circumstances, like luck and maybe a bit of hunger or desire to prove myself. I'm the first person in my family to go to college, and so there was a kind of drive to try as many things as I could, clubs and activities.
Yep.
And so, at 19, I got a job at UPS, the shipping company, as a finance supervisor, and I was managing a team of 20 to 22 uh, auditors, kind of completely autonomous, all hiring, firing, etc. And that sort of stacked my resume. It's still like how I ended up with that job doesn't make a whole lot of sense, but
Mm-hmm.
all of a sudden I've got this, you're a finance supervisor at 19, 20 years old. So I got a lot of attention at college. because of the work that I was doing in my career, and it helped me get really good grades because I was getting practical. I was learning on the job, and frankly, learning stuff before I was taking an accounting class or finance class, because I reported up to ultimately the controller of the Northwest region of UPS. So I was kind of learning things in advance.
Yeah.
So, ultimately, I had planned to go down this entrepreneurial route and didn't even know that this fellowship existed, but the school nominated me for it, and ultimately I got this job, and it didn't feel like something I could pass up. Again, first person in my family to go to college. I'm just thinking about, wow, this is how this is going to look on my resume and what it might do for my career, not realizing that I would have a hard time. It's like getting this, once you have this, like you did this fellowship, you're a CPA, like that's how people think of you. And there's a lot of stereotypes about it. So for the next 6 years, as I did the fellowship, and I worked for a big global firm, Deloitte, and I worked for a Warren Buffett-backed company, and then this guy, Steve Loudon, who then became CFO of Roku and took them public. People kept hiring me. So like, you must be smart. Like, your resume looks good. You did this fellowship. And in the back of my head, I'm thinking, you probably shouldn't hire me because I'm going to be your best employee for like 90 days. And then I'll figure out like how to kind of meet expectations, but I'm going to be bored. Because ultimately I want to be self-employed.
Sure.
So I kept changing jobs.
That's what I was going to ask. Were you kind of job hopping at that time? Like, how did that go?
Absolutely. Yeah. Every 1 to 2 years, I was changing jobs, and people would hire me. And how did that ever
look? Because you hear mixed things. Like, some people say, "Oh, you got to change jobs when you want to move up in corporate America." Others say, if you see a resume that has, was here, was there, was here, that then in that interview they're like, that's kind of a red flag for this guy. How did you maybe leverage that in those interviews? Was it a strength? Was it a weakness? Like, how did they kind of go when they saw that resume?
So I had a much different narrative than what I'm sharing with you about, because I could certainly create a narrative when I was moving into strategic finance about kind of how the fellowship was a happenstance, and I didn't plan to go down this really technical accounting route, but I couldn't pass it up because of how great of an experience it would be. But really, this is the direction I want to go. And it just so happened that the person who would be my boss, and then their boss, this guy, Steve Loudon, they had a similar experience. So my boss was also worked at Deloitte in New York. I was at Deloitte in Seattle, and they wanted to get into strategic finance. And so it was like a sort of again, luck or happenstance, where they were like, I totally relate to the experience that you went through. And, in my case, I had to go get an MBA, but, I'm willing to take a shot on you. So I had people who kept being willing to take a chance, and the narrative made sense to them. And it did. I wasn't trying to be manipulative. I was really conflicted by what I thought I should be doing versus what I wanted to be doing. And what I felt like I should be doing is like, here I am, mid-20s, I'm making more money than my parents ever have. They're working 60 hours a week. And who am I to be so ungrateful? Like, I should just stay this path. And then conversely, I'm miserable because I want to define my own future and bet on myself and
be a gambler.
be a bit of a gambler in that sense. Yeah. And so finally I realized, and it's been 15 years now, so I stopped all the job hopping, although I've started some other businesses along the way. So maybe I haven't entirely stopped it, but I realized that two things: no one was giving strategic advice to small to medium-sized companies. No CPA firms were giving strategic advice around tax planning and around sort of CFO level services to small business owners 15 years ago. It's become more prevalent. but
Yeah.
we were, if not the first, one of the first firms to really lead with strategic planning 15 years ago.
Yeah.
So I saw that opportunity and I thought, okay, here's a chance for me to combine the skills that I have from all the work that I've done and all the job hopping with my entrepreneurial desires.
And who were those first clients? Like, did you have like a stable of clients? You said, I know as soon as I take the jump, I can call on these guys. We're ready to go. Or did you take this good resume, kind of this skill set, and then hit the ground one day and say like, okay, who am I talking to?
I had a stable of 15 to 20 clients that I had built up before I made the move. And kind of what happened was I was rounding out my experience working. And so I left the strategic finance role and I got a job at a large regional CPA firm to do tax work. And what I sort of thought was, okay, I'm either going to kind of rapidly climb this firm and see a clear path to being partner, or I'm going to start my own firm. Mm-hmm. And so about 2 years in at that firm, sort of like, I don't see the momentum that I want. And I was doing some clients on the side, completely different profile than what the firm worked on. So I wasn't competing with what they were doing. And I had another colleague who wanted to leave the firm with me and do something together. And so we were kind of talking about, okay, 4 or 5 months from now, once we build up a few more clients, we might be ready, have enough cash reserves that we might be in a position to do that. Well, he went out and he got some business cards and went to a networking event and was there handing them out and talking about this firm. And someone was there that was married to a high-level manager at the firm that we're currently working at.
Oh boy.
And so he tells his wife, he's like, oh, I saw, I'll just call him Brian. I'll just call him Steve. I saw Steve at this thing handing out business cards, and they weren't business cards with the name of the firm that he's working at now. She took that to the managing partner. He got fired right away. And I got called into the office and they said, hey, Dan, understand that this is not work that all kind of conflicts with what we do here, but I want a full commitment from you that you're going to be all in on working at our firm and you're going to give me at least a 5-year commitment. And I was like, okay, let me think about it. And they said, because honestly, you don't have the skills to be able to do this on your own. So you would be foolish if you were to do this on your own. And I said, well, based off that feedback, you don't believe in me. I'm going to consider this my two weeks notice.
Wow. So they kind of gave you that little nudge out the door.
They ultimately gave me that final push and sort of that, I guess, gambler side of me of like, okay, I'm gonna bet on myself here. And it was interesting because then a couple years later, that same managing partner got lunch with me and was trying to figure out how we were hiring talent that they weren't able to hire at their firm. And I thought, well,
I wonder how.
One of the things is that you got to believe in your employees.
Exactly. Yeah.
Believe in your staff.
Yep. Yeah. Lesson learned. That's for sure. So as we kind of fast forward a little bit now, you're on your own. One thing I want to ask you about, because it's one of my passions, is writing. Like I put writing right up there with managing, what my wealth management practice. When did you become an author? And what prompted that? Was that something in you, or did you feel like you were just running into something every day that you needed to shout from the mountaintops? Like, people need to know this. What brought you from entrepreneur to author?
So the book came out about 2 years ago, but there was a good 2.5-year process before that kind of culminated in the book coming out.
Yeah.
And the precursor to it was just my own failures in business. So I start the firm and I think I'm this like hot shot. I've done this fellowship and I've got all these fancy things on a resume, and I then take that to small business owners, and I'm just kind of mystified by how many things weren't working at the small business owner level. I'd have people come to me and they say, hey, I want these metrics, these key performance indicators, I want these budgets. We'd build them for them just like I would in my previous life. And then I'd check in with them 2-3 months later and just like follow up, kind of deep dive on how it's going. Like, hey, to be honest with you, Dan, we haven't even looked at any of this stuff since you built it. Like, well, what do you mean? We've been sending you these updates weekly, and was this not what you were looking for? Like, no, this is exactly what we asked you to build, and exactly what our mentor recommended that we have. Our business coach told us we needed these things. I'm like, okay, well, why don't you look at them? They said, well, they're just a bunch of made up numbers. When we put together this projection, we didn't really have any data. We just were like, I'd like to grow my business by 50%. So there really wasn't a basis for it. And that type of conversation happened several times where we built something and they didn't find it usable. And initially I took that sort of personally, because a lot of my personality is to default to, what did I do wrong? What could I do better? Mm-hmm. It's the same personality that maybe has you do a half Ironman, or it's like pushing yourself. Like, what can I do? How can I improve? I had a conversation with this guy, Alan Anderson, and he's kind of a performance coach, and he supports Jocko Willink, if you know him quite a bit.
Sure.
And he was talking to me about a management principle, a goal setting principle. And they called it, first you optimize, then you maximize. It's like, this is how you do goal setting. Optimize and then you maximize. And I'm like, okay, well, what do you mean by maximize? It's like, well, maximize means having the most today. Optimize is what's the most critical path forward. I'm thinking about it, and there's this concept, one of these principles I teach in my book called T-learning. T-learning is trying to take T-learning over I-learning. I-learning is being very domain dependent. T-learning is taking from these other domains, principles, and then applying it to your specific issue. And so I was thinking about maximizing shareholder value. Like, that's what you have to do when you work at a Fortune 500 company, maximize shareholder value. And I realized in that moment that everything I learned in business school was about maximizing shareholder value, but small business owners have to optimize. And that realization was profound to me. I don't know if it's profound to you to realize, well, that's why these tools don't work. A budget, KPIs, those typical things were built by accountants for accountants in a Fortune 500 company. A small business owner has to build a different set of tools to optimize. And optimize towards what? Towards what I call their solvable problem, their unique definition of wealth. And so then that caused me to have to build an entirely different set of principles, tools, metrics, ways of advising clients that ultimately became my book around essentially how do you rig the game, get what you want on your terms without compromise.
That's what I wanted to ask you too, Dan, because I feel like the book for many people, that becomes kind of the summation of what they've learned and then what the passion is that they want to get out there. I know that's how it was for me with my books. Rigging the Game, for someone that hasn't read it yet, can you give us kind of like that 60-second, what are maybe those, from a very high level, those steps that you take that someone listening today could say, you know what, I didn't think of it that way, or maybe that's that one thing that I keep skipping that now I need to focus on. Can you give us that Cliff Notes?
Yeah, so the book is written sort of like what I would call an operating system, or a way of making better decisions to get the outcomes that you want with less effort and less risk.
That's a beautiful thing.
And unfortunately, a lot of things that we've been taught cause us to put in maximum effort and take maximum risk. And the consequence is that we have no options. It has to work because we're redlining, because we can't work any harder And we've taken so much risk that it has to work out. And there's a lot of false narratives. So the first part of the book is demystifying some of these false narratives around why people win and other people lose. And I established these 4 kind of tenets, what I call commandments.
Okay.
And this is and you buy into these or you don't. But if you buy into them, then it changes your point of view. We have to bias closer over more. So rather than just thinking I have to make more, work harder, etc., will my actions get me closer to what I want? Commandment 2, we have to understand the difference between preference versus binary. Preference are most of the things that business owners asking, or questions they're asking, are preference-based. There isn't a right or wrong. It depends on what they want. You can't Google it. 3 is every business decision, or every decision is a financial decision. It's just recognizing there's an infinite number of trade-offs with our resources. And then number 4, which is the sort of gambling piece, we only make bets that have asymmetry to the upside, so significantly more upside than downside. If you adopt those commandments, now you're on the path to making decisions, designing systems and processes to get you what you want on your terms, again, without compromise.
Interesting. Very interesting. And I want to pivot a little bit here, as we're kind of nearing the end, and hone in on the accounting industry as well. I know we're tying a lot of things together here, but I know you've spoken in the past about how CPAs are, quote, becoming extinct, that 75% of CPAs out there have hit the retirement age. 300,000-ish have left the industry over the past few years. In enrollment in accounting programs is down significantly. So what would you attribute that to? And is that a good thing or is that a bad thing?
There are a few things that you can attribute it to. One, a number of years ago, about 25 years ago, all the different state societies started this requirement where you need 5 years worth of education instead of 4. So That's a big ask for folks. You just finished your undergrad and now you either got to get a second degree or you got to go to grad school. That's just adding friction to the system. And so a lot of people who maybe would have gotten an accounting degree are like, I don't want to do another year of college, or maybe they can't afford to do another year of college. Right? It's a little bit of, I know this term gets thrown out a lot, but going to grad school for many of us, like myself, would be a privilege that I had to live at home and commute into school. So there's a 5th year requirement. On average, you have to study for the CPA exam currently 450 to 600 hours. The cost of the exams are significant, both in terms of your time, but also typically you're going to invest several $1,000s in study materials. You're going to be in your early 20s and miss out on all your friends going out on Friday nights or weekends because you're studying. So huge cost. And going into it, historically, there's been a 12% first-time pass rate. So even though you put in all the time, typically 1 out of 8 people are going to pass it on the first time. So they tried to make it easier by taking these 4 sections. And instead of having to take them all at once over 2 days, they said you could take it 1 at a time. That's on the surface seems great, but in the classic CPA world, we made the tests harder. So it's like, yeah, you can spread it out, but now they're harder exams, more material, and there's a running clock where if you don't, once you pass one, you got 12 months to pass them all, or you start losing exam or sections that you passed. So we've made it harder. So if I'm somebody over the last 20 years and I'm looking at, I can get an accounting degree and then I got to do all this stuff to pass the exam, or I could get a finance degree and still work in a similar job and make the same, or roughly the same. It's like a pretty big trade-off.
Sure.
Or I could go get a computer science degree and maybe make twice as much. So we've added a lot of friction.
You believe it's like more barriers to entry as opposed to just like a general interest in the profession?
Yeah, it really, right now, back to kind of this comment I keep making about being sort of masochist, it attracts folks who are independent contributors, who are drawn to the profession because it's really hard. It's hard to, that when you're in the program, you're typically the students who have the heaviest workload. You know that if you go work for a big firm, you're going to be working a ton of hours. So it kind of attracts a specific personality type.
Yeah.
But that is a small and decreasing percentage of folks. So we just keep making it harder and harder. And then on top of that, in the profession, accountants, you're the butt of every joke, right? In terms of like, who's the most boring, if you're like writing a TV sitcom and you're trying to think of the most boring profession, it's usually accountant that they insert. So you're going to have this stereotype that comes along with it. And then we've had this massive exodus from the profession, because from my experience, a lot of, and I've coached other CPA firms, and I know a lot of other founders and stuff, they don't feel respected by their clients. They feel like they're constantly being, can I swear on your podcast?
It's fine. Yeah, speak freely.
They constantly feel like they're being shit on by their clients. And so I have noticed, and when I've coached and mentored folks, I've asked them, do you hate your clients? Because the way you're describing your interaction with them, it sounds like you hate your clients. And more times than not, they say, yeah, if I'm being honest, I do. I do hate my clients, because they give me their stuff 5 days before the deadline, and then they hound me wondering why it's not done. And then when they owe a bunch of money in taxes, they're pissed off at me. Why are you telling me 3 days before I got to pay this bill that I owe? And you're like, well, because you just got me the documents a day or two ago. So firms have, and there are a lot of people pleasers in the industry, part of that personality type. So they've often set up their firms in a way where they're guaranteed that they're going to resent their clients. So burnout is high, resentment is high. They don't want to show up. That leads to high turnover in the firm. So there's a lot of kind of systemic issues that have occurred. And it's why I've done a George Costanza with our firm, which is try and do the opposite of all those things.
Yeah, no, I think that's kind of a good move. Otherwise, you're kind of bound to manifest like that same outcome. And one of the things somewhat in line with that question, so I've heard more than once, and I believe a part of it, that unless you are a creative, AI is coming for you. With accounting, especially a lot of those people that feel like they fit that mold of they're a bean counter, they're a worker bee, they're just hustling, they're taking orders from these clients that they're pissed off at, and they're just going with the flow. Do you feel that those jobs are going to be replaced? And if so, like, when do you think that's coming?
So I have demoed pretty much every AI solution that I'm, as far as I know, that's out there to aid with the bookkeeping and tax side of things.
Okay.
And it's gotten better. It's not there yet where it can really replace staff folks, because so much of the return preparation process is nonlinear. It's documents that are handwritten notes, it's Excel files, it's formatted in different ways. And there's not necessarily a uniformity of like, this is a conveyor belt that we can crank things through. And similarly with bookkeeping, there's a lot of sort of metadata that you need, data about the data. Like, okay, you went to Amazon and you purchased and you spent $1,000. What did you get? And even more specifically, was some of that personal? Or you went to Costco. Did you buy some personal things? Right. So there's some elements that make it more challenging, but it's rapidly improving and those problems are being solved. So as a CPA firm, you have to be on top of that. And it's 2 to 5 years out from my point of view of really starting to replace some of the more detailed transaction type level work. It's hard for me to imagine replacing the part of what we do. My ultimate brand is I help you make better financial decisions so that you can fund your solvable problem, your unique definition of wealth, in 10 years or less. And so that requires actually helping a client figure out what they want out of life. You can't figure out if decisions are going to get you closer if you don't know what you're trying to get closer to. So helping clients actually crystallize what they want out of life and then showing them how to make better financial decisions requires a lot of conversations and helping them distill down what they want. That's where we've been sort of trying to fill the space for the last 15 years. And I'm excited about some of the detail work becoming more automated because I can't find people that want to do that work anyways.
Exactly. Yeah. Yeah. Whatever you can offload, and then you can spend more time kind of doing some of this unique creative stuff too.
Exactly.
Number one, what is your favorite book?
My favorite book is How to Fly a Horse.
I don't think I've ever heard of that. How to Fly a Horse. Interesting.
I'm blanking on the name of the author, but it's from the inventor of the Internet of Things.
Okay. I'll check that one out. And number two, do you have a quote to live by? If so, what is it?
The biggest risk in life is not living the life that you want.
Well said. And do you have a favorite movie?
If a gun to my head, it's a little bit maybe played out, but I'd say Shawshank Redemption.
That's a great one. That's a classic. And if you could change one thing about the world right now, what would it be?
People focusing more on what we have in common rather than what we don't have in common.
And kind of in the global theme, I don't know if you've traveled a lot or not, but do you have a favorite destination near or far?
I have a favorite destination. It's not too far away from me. It's about 90 minutes away. So I live in Seattle, and it's kind of just on the other side of the mountain pass called Suncadia. And it's kind of a mountain resort that I go to regularly with my family.
Very cool. Yeah, I got to get out there sometime. And growing up, did you have a hero? And if so, who was it?
I definitely had a hero growing up. It's still the same hero that I have today, which is my dad.
Awesome. And last but not least, if you could tell your younger self, whether as a student or a professional starting out, one thing that perhaps you would have done differently, what would that be?
Try to have a little bit more fun.
Okay. I think that's fitting for an accountant. All right. Well, this was awesome, Dan. I really appreciate your time. And for folks that want to follow you or learn about maybe what's coming up next, can you just kind of plug where you're at and what you're working on now?
Yeah, so probably easiest ways to find me is at CPA firm Nth Degree CPAs, so NTH Degree CPAs, or wealthtype.com. That's really what I'm working on the most right now is those 5 wealth types. And knock on wood, I may have a book out sooner or later around the 5 wealth types. So That's kind of my maybe next passion project.
Cool. Well, we'll definitely be waiting for it. And everyone, I want to thank you again for tuning in to today's episode. You've listened to the Caderna podcast. I'm your host, Brian Caderna. And today we've had the pleasure of speaking with Dan Nicholson. Be sure to check him out. I'll put some of those links in the show notes. And as always, wherever you're listening or watching, be sure to subscribe and leave us a review. We will see you next time.
This podcast is intended for the general public and for informational purposes only. The show does not provide any recommendations or investment advice regarding any specific account type, service, strategy, or product, or to otherwise act in any fiduciary or other capacity. Please contact a financial professional for guidance and information that is specific to your situation. Brian Caderna does not provide tax or legal advice. Please contact your accountant or legal advisor to discuss your situation. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Caderna Financial Team, and opinions stated are their own. All investments contain risk and may lose value. Past performance is not a guarantee of future results. References to specific securities, asset classes, and financial markets are for illustrative purposes only and do not constitute a solicitation, offer, or recommendation to purchase or sell a security. Brian Caderna is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS, OSJ, 300 Broadacres Drive, Suite 175, Bloomfield, New Jersey, 07003. Phone number 973-244-4420. Securities products and advisory services offered through PAS, member FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Caderna Financial Team is not an affiliate or subsidiary of PAS or Guardian. California Insurance License Number 0K04194.